All right, we're live. So welcome back to Dapp University. So today we got a lot to talk about. I'm running significantly behind schedule today, so I appreciate everybody who is actually showing up to the live stream today. I try to put a notice out on my Twitter, so if you're following me there, you probably saw it. But we've had significant setbacks this morning, but I wanted to jump on and give you an update today. So let's talk about that. Let's talk about how crypto is looking really strong. Look at some significant pieces of news that have come out in the past couple of days that help support that thesis. We're gonna, probably answer a few of your questions. And a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to start today. All right, so let's see here. We got people jumping in the chat here. We got Automatic Beats, Culture Hives, Anthony, Michael, Angela, Bruno, G-Main, Dirk, Welcome. Let me see if I can fix this frame. Hold on. I know my camera's about to go out, but let's see if I can find the camera. Whatever. I'm in my streaming software, and it kind of gets messed up in the settings sometimes, but whatever. So let's go ahead and get started here. Let's talk about crypto's looking really strong. Okay. So I've been kind of talking about this recently in the updates, but Bitcoin price has gotten back above $55,000 briefly. All right. So actually it kissed just over $56,000. We're seeing a little bit of a correction from there, but the overall market's looking pretty strong in my opinion. All right. We might see a little bit of, we might see a brief shakeout, brief correction here. But I'm feeling, more bullish even than I was a few weeks ago about the state of things. Okay. For the long term. So let's talk about some things that would, support that thesis. Just from a technical perspective, like I said, I don't like to do a lot of technical analysis, not really my strong suit, but one significant thing here is that we have seen a lot of chop happen, all right? A lot of leverage flush out of the space. Of course, we're seeing some leverage kind of go risk on right now. But I guess the point I'm trying to make is since we had this kind of early blow up in the markets, the fact that we've had some sideways chop for a long time actually creates a larger, a broader foundation for us to make a higher high, potentially later this year, early into next year. So that is good from a technical perspective. But let's talk about fundamentals, okay? Because, what could be causing people to be more bullish on Bitcoin? Because in the day, if the price is going to go up, either the same people have to buy more crypto or new participants have to come into the space. And I think we are probably seeing an increase in bigger players actually get into major cryptocurrencies like Bitcoin and Ethereum. So a couple interesting articles that I saw were linked to this tweet from Lark Davis, the Crypto Lark. So definitely subscribe to his channel if you haven't already. But he is saying, he linked to a couple articles here and kind of summarized them in a little tweet where he said, basically, JP Morgan says that that the big money prefers Bitcoin over gold, and they also think that they prefer Ethereum over BTC. So I guess it goes like this: ETH, BTC, gold, do you agree? So I think that we are seeing, more big money kind of get into the crypto game, favoring Bitcoin over gold, like they're saying. But also, we have seen this sentiment before on the channel earlier past few weeks, where Ethereum futures are more popular among major investors than Bitcoin, according to JP Morgan's study. Okay, so I think these are all bigger factors, and I think what's kept a lot of people out of the game, all right, a lot of these big players out of the game, is regulatory uncertainty. What's going to happen, just the uncertain nature of the crypto markets, the fact they've had this correction. But also wondering what the major bullish catalysts are coming down the pike. And so I think that a lot of people are, kind of seeing the battle sort of play out in the regulatory landscape. So I want to talk about that and how it looks like it could be going favorably in the direction of crypto. So one report that I actually saw come out in regards to this was a report from A16Z. All right. So massively invested in the crypto space, especially around the infrastructure that's built with the technology. So they actually put out a proposal to the Senate Banking Committee that I thought was really good. And you can definitely read through this if you want to. But I'll put a link to it down in the replay, so you can check that out if you want to. But so A16Z, if you don't know who they are, basically, they are responsible for funding a large amount of projects in the crypto space. A lot of the capital that goes in this space is coming from A16Z. And so they have a lot of skin in the game, a lot of interest in watching the crypto ecosystem flourish, the Web3, decentralized, everything. And so, they are kind of positioning themselves as a think tank for what common sense regulations could look like for crypto, and also being somebody who could have significant influence on, the direction that these policies take, and someone who could actually be listened to, by regulators. Okay, so basically they have this report. It's pretty good, and I think it has some good language that I think is going to sit well, sort of like old school people who are kind of clueless and have no idea what's going on here. People that don't speak the millennial and Gen Z, Gen Z, the Zoomers, all those types of people. They don't speak their language. I think this report's written really well in order to communicate to the audience that needs to understand what's going on here. So we can just kind of take a little taste of this. So we are at the threshold of the third generation of the internet, Web3. Given the pace of innovation in this space, it has been challenging for many policymakers to keep up. That's why we are so heartened by the Senate Banking Committee's call for feedback on clarifying laws around digital assets and decentralized technology. So maintaining America's innovation and financial edge has always depended upon business leaders and policymakers collaborating to ensure that the private sector can experiment and build, while appropriate regulatory regimes help manage the real downside risks that might otherwise harm individuals. So I'm out there happy to answer the committee's call for feedback, and they have actually put together these feedback for 4 proposals, okay? Each proposal is designed to stand on their own, but taken together, they represent a comprehensive approach to supervision, oversight, and taxation in a decentralized environment. So they kind of summarize these into multiple, 4 different things: consumer protection and inclusion, decentralized autonomous organizations, or DAOs, how they should be regulated, comparing jurisdiction, harmonization, SROs and nonprofit corporations, and then also, basically taxes, okay, and how this should work in the blockchain ecosystems, okay. So, I think this is good and it's strong, because I think what they're saying is really consonant with what I've said a lot on this channel, which is basically, I think we should realize that crypto regulations are an inevitability, and so given that that's true and accept the fact, what can the best and lightest regulations look like that can do the best of what regulations can do well, which actually is provide some sort of protections in there, but also not hinder progress, all right? And actually something that would not push massive GDP, push massive GDP creation offshore from the United States. Because at the end of the day, nobody really wants that. Because that's the thing about all of these regulations. I guess one of the biggest problems that I have when things like this get heavily regulated is there are things that are done with good intentions that have horrible consequences, right? Where the actual outcome does not match what the intended effect is, and so I think what they're saying is, consonant with that. So one of the reasons I bring that up in favor of strength in crypto is as we get more clarity on what's going to happen with regulation around crypto, Web3, all that type of stuff in the United States, the stronger it gets. And, the big players of smart money are watching this conversation pretty closely. As we see, the fact that we're seeing call for feedback on this, that we're seeing good feedback actually proposed on this type of thing is good. It's strong for overall crypto space. That's going to give people a lot more confidence to move in. People are actually watching this space and watching the regulatory conversation. So that's another big factor. The other big factor is what's potentially going to happen with a U.S.-based Bitcoin ETF. Okay, because a lot of people are still waiting for this to potentially happen in October. So this is from Bloomberg. Wall Street could get 4 Bitcoin futures ETFs by end of month. All right. And I haven't wanted to talk about it too much because a lot of the stuff that I've seen looks like rumors. It looks just like screenshots of Bloomberg terminals. that could have easily been, photoshopped or whatever. So we'll have to wait and see. I'm not hanging my hat on this too much because it might not actually happen. All right. So, but that's what Bloomberg's talking about. So after years of waiting for a U.S. Bitcoin ETF, the crypto community may finally get as many as 4 products in a matter of weeks. So that would be pretty crazy. The fact that we've been waiting this forever and then you get a cluster of them all at the same time is a distinct possibility. So this is one of the screenshots I think I was talking about. So this month, the Securities and Exchange Commission once again has to approve, reject, or delay a set of applications for exchange-traded funds based on the largest digital currency. This time around, they all follow the format that SEC Chair Gary Gensler has indicated could be received favorably by the regulator. So they told Bitcoin futures rather than the digital asset itself, or they'll hold Bitcoin future the digital asset itself and are filed under the Investment Company Act of 1940. So anyways, basically, it's all raising hopes that the 6.7 trillion U.S. ETF industry and beyond, blah, 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 blah. So anyways, these are the potential dates, all right? So this is like one of the Bloomberg terminals screenshots that I've seen floating around that I was like, hey, this could easily be Photoshopped, but this says source Bloomberg Intelligence, and it's on Bloomberg's website. So October 18th, October 19th, October 25th, and then one kind of, dangling over into November. So let's see, how far away is that? 10 days away. So we might get it. And then we have odds of getting approved first, 2-1, 9-1, 20-1, 5-1, 15-1. So let me know what you all think down in the chat or the comment section below. What do you think about the Bitcoin ETF? Is it a big deal? Does it even matter? I think fundamentally it matters. In the very least, it's going to matter from narratives and hype. We also could be looking at a buy the rumor, sell the news situation, so you have to factor that in. But I think long-term, fundamentally, it does matter. I think more people will actually get exposure to Bitcoin and other crypto products through ETFs, through traditional means. There's so many old-school people with a lot of money. If you look at the wealth distribution by generations, it's pretty insane. Like, let me just look here. Basically, what I'm saying is, like, the number of people who would invest through ETF, I think you might be surprised at what a big number that is. I can't find the graph. I'm going to try to pull it up on my computer off the top of my head. But it's like looking at, like, the age. Okay, I'm going to pull up a graph, and full disclosure here, like, this graph may not even be close to true. But let's just take it with a grain of salt, all right? But the whole idea here is that, like, if you look at, like, here, this is a big share of, like, what is this, like, half maybe of this entire area, like half of all the wealth is controlled by this generation, maybe more than half. So like I said, take this graph with a grain of salt. This is not the one I'm talking about. I've seen other graphs around there. The whole idea is, people who are basically over 50, have a lot of money or control a lot of the money out there. And ETFs would be pretty big for that demographic, in my opinion. Somebody says, personally, I think right now people are going to pick ETH over BTC, especially for NFTs. I think a lot of people will. Somebody says, yeah, crypto pumping right after a sell. Yeah, it happens. Let's see here. Somebody saying, yeah, they believe the ETF matters. On 10/18, the government runs out of money. Yeah. Do I think the cycle goes into 2022? That's a good question. Yeah, nobody knows for sure. I think probably. It depends on what happens. I mean, we have 2.5 months left in 2021. So I mean, it's one of those things where I would adjust that opinion based on what happens throughout the rest of 2021. I mean, if we see some astronomical numbers in the crypto markets really fast, maybe not. But if things kind of continue on the trajectory they are, which is, you know, significantly trending upward, but we see some chop along the way and some blowups, then maybe we have some more time. Bitcoin is just overpriced for the average person. Bitcoin will get the institutional investor, ETH for the retail. I mean, if you're talking about in terms of unit bias, maybe. Like somebody wants to own a whole Bitcoin and feels like they can't, but they want to own a whole Ether if like they can't. I mean, unit bias definitely plays a factor for like retail investors, but like it doesn't really matter what the unit is as long as you can afford the subdivision of that unit. Really, it's more about you know risk reward and return on investment in terms of percentage gain. Let's see here. So I haven't seen the language that you're talking about in the infrastructure bill about the internet. So what I think about NFTs giving out tokens like Genesis Kongs. So it's a good question. I don't, I don't have commentary on every specific NFT and like how it works and what it does. There's just too many NFTs for me to keep up with. But what I do think is actually a pretty big deal are NFTs that have, other use cases and benefits beyond just, storing artwork on a blockchain. Now, really early projects that were just, early NFTs that had cool artwork on the blockchain, like CryptoPunks, for example. It's going to be such an OG NFT that even if the CryptoPunk itself never does anything beyond just look like a CryptoPunk, the fact that it's so original and so meaningful is always going to make it valuable. Now, we have lots of other NFTs that came out and experimented with things and provided new benefits. So NFT, like we're seeing NFTs come out that actually, produce yield. So that's pretty cool. Or NFTs that have some sort of programmable aspect to them that give you another benefit, like whatever it is. I think those NFTs have a much stronger future than like brand new NFTs coming out that all they do are just pictures, right? I mean, it depends. You might find some really good ones, right? But I think the future for NFTs is definitely going to be ones that do more stuff. Now, the cool thing about, just regular NFTs that are just pictures is smart contracts are programmable. So you could create another smart contract that enhances, what you can do with the NFT. We've seen lots of experiments with this, right? Some of them are kind of just silly. Like they're not going to really do much. Like we've seen like I've seen people take CryptoPunks and like, make a body for them or something, or like put them on other stuff. I mean, it's cool. It's just like saying, oh, let's kind of experiment and see what you can do with this stuff. But you could take a CryptoPunk and like turn it into something more like a Bored Ape Yacht Club, where it actually has some sort of membership benefit with it, right? Like that's the cool thing about smart contracts is you can just add more stuff to it. You can't change the original contract itself, but you can create a new contract that's like, hey, if you own a CryptoPunk, then add this behavior. So good question. So when ETH 2.0 arrives, will my ETH 1.0 be automatically converted over to ETH 2.0 and staked, or is that something I need to do? Pros, cons. So the ETH will automatically convert over. There's nothing that you have to do, but if you want to stake it, then that's a totally different ballgame. So there's different options for staking. If you want to stake it natively on the Ethereum network itself, you have to run a validating node and actually lock it up into your validator node. So, I mean, vast majority of people aren't going to do that. You can always stake with staking pools. It's an easier way to do it. You can always stake it on a exchange website that offers staking, like Coinbase, for example. There's risks associated with each one of those strategies. You're gonna make less money if you let somebody else stake for you. But those are the options. So you do have to do something to stake, but you don't have to do anything to basically get your ETH to ETH. The funny comments in the chat there. So do I own NFTs? Yes, I own some NFTs. I don't do a lot of NFTing that way. I mean, I just don't do a lot of active trading, right? I do some, just I do some, right? But vast majority of stuff, I just, buy and hold. So say the mining gone and low rate of return on staking. Will we see a lot of money flow into other coins? What do you think? I mean, we're always going to see money flow into other coins. So that's the final answer to the question. But I don't think that low rate of return on staking and mining gone are going to be significant factors in that equation. Yeah. I mean, low rate of return on staking. I think the staking rewards will probably level out to around 5%. We can check out and see what they are right now, actually. They could drop lower. We could go into 4-ish%, depending on how many people end up staking. So here's the ETH 2.0 Launchpad. We currently have 200, I'm going to round up, 250,000 validators, 250,000. About 8 million ETH staked. Current APR is about 5.5%. You can watch what happens when it goes down here. Let's just see. Um, 5.5. So if 10 million ETH were staked, it would go down to about less. It would drop below 5%. So here's what this is going to really appeal to. I mean, here's the thing about the yield, right? Like you're getting 5% on something that's where your principal is increasing in value. Okay. So that's different than just like taking, I mean, that's assuming that the price of Ether is going up and you're in a bull market, right? So I think I can think about this, right? Like, so that's different from just taking like stable coins and putting it into something that's generating you 5% yield because the price of your stable coin's not changing. Your price of your stable coin's just flat. So, look, let's look at this. Like a really easy way to calculate this would be, let's just see here. What you could, so really easy way to calculate this is to basically like look at like the crypto prices. Hold on a second. I'm just gonna pull it up. Okay, yeah, here's a pretty good chart. So basically, how you think about this? So the staking rewards, so about 5%. You're looking at something that has your principal is actually appreciating in value. So the whole idea here is this is attractive for a certain type of profile that wants to buy an asset and like never sell the principal. Okay, and then anything that you're getting. Anything that you're actually selling might just be the yield that's created by the principal itself. It's more of a long-term passive appreciation play. Because at the end of the day, if you never sell the principal, then basically you're just taxed on the gains, those staking rewards that come off the top. And so if you're getting 5% on something, so let's say you bought $1,000 worth of Ether. I realize you can't stake the $1,000 natively. But let's just say you buy $1,000 worth of ETH and you could stake it in a staking pool and earn that 5%. I realize the math's a little bit off here, but just for easy math. And then that 10x's over time, and now your ETH worth $10,000 and you're getting 5% on top of that. Well, really, it's like you're getting 50% yield off your principal that you invested, okay? Because your principal's gone up. So that's still attractive, even though staking rewards are low. You can't think about it like stable coins. Same type of thing with dividend-paying stocks and cash flowing real estate. The thing that you bought, the principal's increasing in value, but it's still got yield on top of it. So, and you can kind of think about this. If you look at the Ethereum price chart for all of 2021, let's look to see if we can find an average number here. Let's look at, I wonder if it does that year to date. Yeah, year to date. All right. So year to date. So it won't give me I was hoping it would give me the average price for Ether throughout this year. Let's just try to do a really quick, rough math. So it started the year off at about $1,750 and peaked up around here. Let's just say the average price is around maybe $2,200 based upon how much it's gone. I'm just going to kind of spitball that off the top of my head. So basically what you would do is you could calculate your staking rewards to be, $2,200. Let's say you had 32 ETH to stake, so 32, and you're averaging about 5.5%. So you have gotten 1.76 ETH times $3,400 or $2,400. So you'd have $4,244 on an initial investment of 32. Yeah, you'd have basically a $5,000 return on a $24,000 investment on January 1st. So that's not too bad in traditional markets, and that's just from yield. That's not from price appreciation. You have to add the price appreciation on top of that if you want to talk about your real gains. It's 24,359, right? 3,600. That $24,000 is also worth $115,000 now. So $91,000 plus your appreciation. So basically, you basically made $115,000 in profit. Or actually, I got added the wrong number there at the end. You made about $100 grand in profit off a $24,000 investment if you bought here and staked the entire way through with 32 ETH. All right, everybody, that's all I got for today. Somebody's asked me a question here. They say, what do you say at the end? They're like, Udemy. So you don't know what Udemy is? That's like the website where you can go buy courses. So anyways, yeah, that's all I've got for today. As always, subscribe to this channel. Like the video if you haven't already. That really helps these videos out so the more people can learn about blockchain. If you do like this content, you like these videos, and you want to get your hands dirty with blockchain, learn how to become a blockchain developer today, learn one of the highest paying skills in tech, how can you get started? You can go to my YouTube homepage. You can find any of those free courses there. They're just like a Udemy course. Udemy. Somebody's asking me about that. Udemy course, but they're totally free. If you like those and you want to take the next step, or hey, maybe you want to take a master's shortcut entirely, I should become a blockchain master step-by-step, start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp University.